Hi everyone. It's been a while since I made a video. It's been a week. I was just observing the markets by myself. So here we're looking at the S&P 500 on the daily time frame, and as you can see, that level is where the relative equal highs are, and this is where the sell side liquidity on the daily time frame is. This dark gap that was refilled on June. So with that in mind and targeting previous daily lows, the possible targets at these two relative equal lows, this candle and this candle, and there's also a target for this daily high, this candle, and this relative equal highs on the S&P. That's on the daily. Drop down to an hourly time frame. You can have a wide view of what's happening. That's the sell side liquidity. So as you can see, we have this long-term high. It was respected. I would call this an intermediate term high because it came to rebalance, except there's no imbalance, so I wouldn't call that intermediate term high. I'd say at this point your bias had been broken because we were expecting these highs to be respected, this high to be respected, but then it broke. But it's coming back, so this might be a new long-term high. Let's see how it goes. Then there's these stop rates. There's this SL liquidity. It was raided. Then it was raided again on Monday. Then it was raided again yesterday. What's been left from yesterday? Well, you can see two gaps. That gap and that gap. Now, not every time, but these ones will most probably be rebalanced. Now, when we look at, let's drop down into a 15-minute time frame. Go back to Tuesday last week and see everything that happened because that's the last time I made a video, right? In fact, let's just start from last week, Monday. You see imbalance, rebalanced, almost right for that stop point. So on Monday, what happened? Well, these relative equal highs were taken, this one and this one. So they took those, traded into it. Now you may or may not be thinking you're going up, but because the bias was bullish, and this is just a day you probably took a loss, because the way I see it, oh wait, there was sell side that hasn't been taken and sell side, and the stop point was buy side liquidity being taken all the way from till here. So at this point should be anticipating what the sell side before 8:30. This sell side, this swing high, this swing high, this swing low, this relative equal lows. You see them? Just draw a line. That candle and that candle. The major draw. So this you shouldn't trade fair value gaps, you should trade bias. So did you see a setup here in the 15-minute time frame? No, unless you took this. See that right there? Let me just remove this. That gap right there. But if you're targeting this sell side, they had already taken it. But chances are they're gonna go for the relative equal lows. It happens a lot, guys. It happens a lot. So that would have been your entry. Your stop should have been right here because it's the S&P. You're not risking, and your TP would have been just before. In fact, that should have been your partial, but you should usually let it run till 4, and that would have gotten you 21. Now, if you don't like this risk, you can just use this fair value gap, the high of it, and that was the trade for Monday. Now, all this time, remember the bias is what? Bullish. The order block hasn't been invalidated. What's happening in my charts? Since the order blocks haven't been invalidated, so sorry, I don't know what's happening with my PC. Where's the order block? This is the order block. This is the second order block. These three down close candles, they haven't been invalidated. If they invalidated, that does mean we have a shift that goes lower. I'll make a video explaining ICT concepts, although he says we shouldn't, but most of you might not be understanding what exactly I'm doing here, and my referral to go to ICT might not be as efficient, so I'll just have to make a video. Anyway, back to where we were. The bias is bullish, right? So we're hunting for what? Setups that give us exactly what you're looking for. So it's Monday. I mean Tuesday. We already did Monday, right? It's Tuesday. 8:30 is what you're looking for. Doesn't matter if there's news or not news, that's when the algorithm starts. So 8:30, sell side liquidity right here, but in form of sell stops. Buy sell liquidity right here. We just annotate that. This video might be a little bit long. With a fair value gap. See how it just taps into that fair value gap right after the stop, and sell stops were taken here at 9:15. Then what happened? They raided the sell stops and rebalanced that fair value gap, and then continued to consolidate all the way. And then what happened? At noon, they raided the sell stops, and in fact went on the way. They left these relative colors. So that's what 12. You shouldn't be trading at 12. So in fact, we wouldn't be in this trade. And then at 1:30, I don't see much in 1:30 all the way till 4. You can't force it. It's either there, it's not there. You know, these are 15-minute time frames are high confirmation rather than 1 minute, 2 minute. But if you can excel in those, it's also okay. So that's 8:30. What's our target? Well, this is the swing high before that. And what's the swing low before that? Well, I mean this one, it's already been taken. These ones have already been taken. So this looks like an uncertain day for me. Not sure what I'd have been targeting. And then that's 12. I don't know. It just doesn't look like price action I'm looking for. Thursday. When we're hunting what sell stops in the form of relative equal lows and highs and fair value gaps. So that's 8:30. Sell side. What's the drawn sell side? If you're thinking about the last swing low, it's this one. That's what ICT teaches. But then this, the minor sell side liquidity, this would be the major draw. This would be the minor draw. So the minor draw gets taken at 11:45, right after the buy sell liquidity has been taken. This was the buy sell liquidity, obviously. So what did they leave? They took out all the buy sell liquidity. They took out these buy stops. People who had traded the stop loss going short. Same case here. In fact, these ones might have already been taken out here and here because of these stop ones, and they took out these ones right there. Took out the minor sell side, and at 1:30, because that's when we're hunting for, looks like they just rammed the sell side. I don't see a clear setup, but then again, this is the 15 minutes, so I'll go down into lower time frames. And then we have buy programs at round 3, took out that buy side and went on to take out all the remaining buy side. That was Friday, 28th June, that's last week. So looks like we had news on Friday. This must have been, I don't know, NFP, I'm not sure. So 8:30 candle right there takes out the buy side. You know what you're aiming for, sell side, but you're not trading till 9:30. So 9:30, what happens at 9:30? It seems the news was at 10. At 9:30 they've taken the sell side. So and they've already taken buy side. So at this point, and there's nothing to aim for. There's nothing to aim for in the form of buy stops above this 55.80 level. So I think I'd just wait to see if we would target this sell side liquidity and the one that was left on Thursday, since there's obviously nothing to target unless you're trading on continuation. But I don't like trading continuations because then you're gambling, because you have no idea what's being targeted. So it goes all the way down, and once this swing low is broken right here, I think this would have been an entry. But then again, it happens at 12, so this would have been the proper entry. Do you see it? Do you see the fair value gap? It was more clear in my head, but I guess it's this one. That's 2, and then it'd be aiming for what? This. The swing low has already been broken right here. This swing low was broken. It formed an imbalance. It traded into it, and you can leave it till 4 if you want. Those of you would have taken partials here. Remember, this is the S&P. So, but if it was the Nasdaq, then you're doubling whatever the pip range is, doubling or tripling. That would have been your stop. In fact, that's actually it's an okay amount of stop. So you'd have got 26 pips. I would have taken part in this because there's this draw on sell side that was never taken. There was this one, there was this one, there was this one, and they went and took it right out. Look, it just takes it and goes back. You can't make this stuff up. And now in this trading week, I'm back on this trading week. Okay, 8:30, nothing much on Monday. I'm guessing 9:30. Took out the sell side, can't see a potential setup. I think I'll just have to use my levels. Okay. Then 12 sell side, not much. Not much you can see on Monday. Maybe you need to dig deeper. These candles, they don't give me a narrative. I mean, one can argue, but then no swing high broken, no target, but maybe. But this, I don't like this. But okay. That could have been an entry. I'm aiming for this draw on liquidity. But you see, it never reached. Never went up for that. And there was also these imbalances. Most times when I'm looking at the markets, I see these imbalances and relative equal highs or lows. It usually trades right into them and then continues upwards or downwards, whichever way, but one way or another, like not often it does. So this would have been a long position, and your entry could have been anywhere between